Robschild, no investment advice. Welcome to the show where we view the financial markets using Benjamin Graham's investment philosophy, macro technicals, and a touch of crystal ball gazing. Today is Tuesday, May 6th, 2025. Today's episode begins with our headline, Robschild sells SOXS after 20% loss. And given the same exact setup in the future, I would do exactly the same thing. Semiconductor companies, including AMD, Nvidia, have their PE ratios that are nosebleed high. The valuations don't make any sense, and I can't control what Mr. Market's going to do. And a fund like SOXS, which is triple leveraged inverse, when the pattern breaks down, it's too much for me to be able to hold. Even if it, collapses further tomorrow and XS goes up, I did the right thing by losing 20% and only 20% in my view. And just to explain what I mean is this SMH chart pattern. We have this blue line that connects October of 22 to October of 2023. We broke it. We retested it. This is a massively huge line. We retested it and then we broke above it and then it failed. This blue line is no longer in play here. We also had this massive longer term head and shoulders top that broke and retested but then failed. The whole thing failed as far as a chart pattern goes. And so now just today we got right back down to exactly the high of the scene of the crime, as some people say, of April 9th. That was the right time to exit the short. Unfortunately, I missed it. It happened really fast in the morning, and so I just got out after hours of SOXS. Like I said, this was a perfect setup. I did exactly the right thing, exactly at the right time, and I got out losing money, which is what happens sometimes when you take risks. That's the risk part of the risk and reward. Believe it or not, I'm not the only person to have ever lost money in markets or have made calls that didn't pan out so well. For example, never mention Dexter Shoe to Warren Buffett or U.S. Airways. Also, you might not want to talk about Michael Burry's water thesis in 2015 and 16, or his large put position on Tesla stocks in 2020. The goal is not to make every call correct. The goal is to make a lot of good calls and perhaps one really good call. One thing Michael Burry is famous for is saying how hard it is to get one thing right. And, the one big thing he got right was the financial crisis with the housing bubble in the form of low credit ratings affecting higher credit. Point is, he knew what it was going on and he made the right call and made a ton of money then, but he's made a lot of not so good calls either. And so here on Robschild is also going to not always win. I will repeat, I lost money then in this trade, and I would do it again exactly the same way that I did it, because the patterns showed me what I needed to see, the valuations told me what I needed to see, and it went against me anyway. Community topics. Moving on to the community topics. What moves, if any, did you make today? Robschild sells SOXS after hours at $18.95 at a 20% loss. I was aiming for $18.50. Hold on a second. No, I didn't sell it at $18.75. It was $17.95. Anyway, it got down to that red line today, which was the actual right time to get out. That was when SOXS was around actually $18.60. That would have been better, but I didn't catch it, so I got out after hours. What moves did you do today? Coming up later this week, we have continuous tariff updates. AMD earnings came out today. I'll take that off of there. if you were watching after hours, it spiked up. As I'm talking right now, it's actually negative 1%. You know, when you have companies that have such excessive valuations, earnings needs to like blow people out of the water in order for the stock price just to stay flat, just for it to make sense. And their earnings apparently only beat by 3%. I don't know why it went up by 5% or so in after hours before dropping, but yeah, so now it's down 1% or so. Anyway, tomorrow we have the FOMC meeting. Like I said earlier this week, we have a bunch of FOMC members talking on Friday as well, but the core information is coming out Wednesday, especially like the dot plot, and of course what Powell says about things. I'm still strongly in the camp that they can't cut if the stock market's up. Inflation isn't low enough and unemployment isn't high enough. So why should they can't cut? Their hands are tied even though they see the storm. They see the storm coming and they can't do anything about it in my strong estimation. But let's see what Powell has to say tomorrow. Could be interesting. We also have Thursday. Continuing jobless claims is the number that I'm looking for that could really rock things around. Like I mentioned last Thursday, and I continue to mention, we just recently saw last week the continuing jobless claims make a new high that we haven't seen for years. This is a hard data. It's, you know, we've been seeing all this soft data of like, yes, the recession's coming. Yeah, we had an inverted yield curve for basically 2.5 years at this point. Yes, people are really nervous about the future. Continuing jobless claims is hard data. It's not soft data. If this continues to tick up and up and up, watch out, Mr. Market. I think this Thursday's report could actually be a much bigger news event than the FOMC this week, but you know, that's just me and my crystal ball. As always, thank you for watching, subscribing, commenting, and supporting. Remember the subscription button, it's right over here. You just put your mouse over it, you highlight and it says subscribe, you click on it, and this is how you support the channel, also in the description. Thank you very much. The daily reminders, macro views, unchanged. Look at my website, it's in the description, click on it, daily reminders are explained. This added a lot to the reason why I was able to have a very large, very highly leveraged short position on SMH. I still think things are going to collapse. I don't know if it's going to take a week, a month, 2 months, 3 months, but it's coming. It's coming. I think it's coming soon. For me, being long in stocks right now sort of feels like walking into a minefield and hoping that, you know, you don't step on one at this point. No changes to the crystal ball readings. The one change that I have for short term is I'm no longer in SOXS, all gone. Moving on to the data, I wanted to start with a CNBC headline today. Trump downplays tariff talks. We don't have to sign deals. Well, now that stocks are up, we gotta knock them back down. I mean, after all, the goal here, like I have been pounding the drum and saying for a long time now, is that the goal is actually lower rates so that, you know, we can have the, you know, he wants to spend money. He can't spend lots of money on the stuff that he wants to spend on, you know, border control, military, and everything and anything else. We can't continue to grow the fiscal deficits enormously, and we need lower rates, so we need the stock market to go down. So what does the media do? They say Trump downplays tariff talks, saying, hey, we don't have to sign any deals. We gotta, you know, you gotta stick your stick into the side of the stock market and tell it to go back down. That's what I see going on here. Anywho, moving on to charts, the S&P 500 dropped by 0.77% today. It's following exactly what I thought was happening with yesterday's candle. Like I said before, we're not fighting at this psychological 5,700 level, which means it's turning into a blow-off top, and that's exactly what we saw today so far. I think it's massively important to be aware that the VIX futures term structure is still in backwardation, complete inversion of this curve, meaning that market participants see the market as being on fire right now. This is not like a healthy bullish sign. This is absolutely the opposite. The institutions that sell these options contracts are charging more for them because they're afraid of them playing out. They know that the market's really volatile here and then it can move a lot up and down. That's why the VIX is above 20. That's why the VIX futures term structure is in backwardation. Another very important thing to have on your radar is the Fed funds futures is now pricing only 3 cuts for the rest of 2025. We were previously looking at 4 only a few days ago. Again, granted, the 4th cut is now priced to be January, but stocks are up, the Fed can't cut. Does that rhyme enough to be like a phrase? I came up with that on my own. I don't know if it's going to stick. But we're clearly in a position that that's the truth right now. If stocks are up, the Fed can't cut. I'm continuing to think that there's professional financial market traders that are whispering into Trump's ears. As soon as crude oil had been falling Monday, Tuesday, Wednesday of last week, what does he do? He announces, hey, anybody that buys Iranian oil can't do business with America. So what happens? Oil goes up. And then it goes down, and then, it looks like we're going up and up higher. So what does Trump do? He says, oh, hey, we don't know if we're going to do any deals with these tariffs. You watch, make it go down, make it go back down. It really feels like that's what's going on. I don't know if it is or not, but it is pretty notable that oil is getting a pretty good bounce here. Many people are still expecting us to at least get down to the previous wick low of 55.11 before probably going lower. But that's the next stopping point on the downside. I think it's worth knowing today that for the one-day performance of different sectors, what really brought down the market more than anything was healthcare. If you look at the other sectors here, we had utilities positive and many other sectors negative, but then healthcare just blowing everything out of the water, going down 3%. I don't know if this is earnings. I think it probably has to do with the announcement that Trump made regarding pharmaceuticals made overseas are going to be tariffed now. So, of course, healthcare stocks have to get a hit. I don't really know, but I found it interesting. Next, I want to bring up junk bond credit spreads going flat. We were going higher highs, higher lows, and then more recently sort of cooling off. Don't know where we'll go from here, but it's worth knowing where we are. From a chart standpoint, I think we are still counting us as being in widening mode. I need to see April 2nd credit spread of 3.42 to be taken out to the downside to have me believe that we're no longer widening here. We're certainly not widening at the previous exponential pace that was happening previously, but we are still on the path of widening. Next, I want to bring up gold, going up even further. Oh my goodness, back up to $3,400 so quickly too. Pretty amazing stuff. I am still in the camp that this is very, very, very likely, based on historical valuations and chart patterns, that it wouldn't make sense to not at least revisit this place where we braked out, this channel that dates back to April of 2024. This is just such an explosive move higher. It doesn't make any sense, really. What does make sense is if we get back to retest this line, at least retest it. If not, I think gold should most definitely not be over $2,000 an ounce, but that's just me and my crystal ball. At the very, very least, gold should be pulling back sub $3,200 level. If we get back up to the previous high of 3,500, I will be shorting at that level. Next, I want to restate that the CNN Business Fear and Greed Index is indeed in greed mode now. Still, I expect this to be temporary, but we'll see. One reason for this is the put to call ratio. We are now, believe it or not, back down to pre-Liberation Day levels in the put to call ratio. In other words, all the bears are dead. All the bears are dead. All the bears that came alive on Liberation Day and bought so many puts, now we have an equilibrium between calls and puts here that was the same as what we saw before Liberation Day. And so for me, this gives plenty of permission for the market to roll over here, and it makes sense with that blow off top looking thing in the S&P 500. So tomorrow, look out for that FOMC meeting. I believe the dot plot is released at 2 p.m. so it's a good time to pay attention to what's going on at 2, and then 2:30 is when Jerome Powell speaks. So, you know, there's not really anything to do or see until probably 3:30 towards the end of the trading day. And then really look out for that 8:30 a.m. jobs, initial jobless claims report and continued claims at 8:30 on Thursday. That's all for today's episode. I hope you enjoyed, and thank you for watching, and see you next time. Robschild.